Live Trader Showcase for December. It's the last one for the year. It's a quarterly event where we feature expert traders to bring you training and insights and techniques from 20 expert traders. We have prizes that we're giving away thanks to our wonderful speakers. Surprise interviews. We're calling them hot take interviews. I think you're going to love that. So please check out tradersexclusive.com where we regularly post articles and video clips with valuable trading tips and techniques. And that's also where you're going to find recordings. Yes, we are recording. So before we get started, I need to share our quick disclaimer. Of course, you know this, but it's required that we say it out loud. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results.
What should a new trader focus on as they get started? That's another simple one. The KISS approach. Excuse me. Keep it simple, for goodness sakes. Keep it simple. You know, there's all kinds of indicators. There's all kinds of charts out there. There's all sorts of things you can do to a chart to complicate a chart, and there's 101 things that you can do that just makes confusion. And what it ends up doing, and it makes you second guess your trade. Honestly, all I trade with, and I'm quite successful, okay? What we focus on is doubling our account, whether it's a $5,000 account or a $40,000 account, doubling it in 12 months. And we simply follow the trend, candlesticks, a few proven setups, and we learn to accept losses, small losses. Now, we have to accept the bigger ones, but we don't like those. Keep the losses small and accept them.
I often get the question from new traders what they should focus on as new traders. And I think the most valuable thing to focus on is creating a good plan for trading. The last thing, in my opinion, that somebody wants to do is jump into the markets because they've got money to trade. Having a plan means making sure that you know what your trading goals are before you even start trading. You select a style that meets and matches your personality. You choose markets that you're interested in, comfortable with. You develop entry and exit strategies using indicators and tools that are proven. That's one of the most important pieces. You manage your risk. You know exactly how much you're willing to put towards trading, how much you're willing to put into a single trade, and if you lose money, how much are you willing to lose before it's time to exit that trade. Keep good records, backtest what you're doing, refine, review, and refine again. At the end of the day, the best thing for a new trader to do is have and create a plan.
Next up is Dan Bustamante of The LongVol. He started his career in trading at the age of 20 with Charles Schwab and Company as one of the youngest hires in the firm's history. He began trading professionally as a futures prop trader before working as a portfolio manager at a long-short hedge fund. Today, he runs the LongVol report, which covers long-short stock trading with a model portfolio and active swing trade alerts using deep in the money calls and puts. Dan, thank you so much for being here with us today. And
all right, so welcome everybody to the webinar. So like she said, I got in yesterday and thought yesterday was my day. So I showed up, I was ready to go, waiting for her to announce my name, and I realized it wasn't my time. So my name is Dan Bustamante. I'm the founder of The LongVol. I know you guys have been going through a few days. I just listened to a few of the presenters. I'm going to do something a little bit different today. While I do teach people to trade the markets, let's just be real blunt about it in this webinar. Learning to trade is pretty hard. You'll hear my background here in a second. It's not a very traditional background to investing, but it's unique. And so the easiest thing I found, this is from over 10 years of being this side of the business, and I started this 3 years ago, the alerts 3 months ago, was people just got to a point where they were like, look, I don't have the time to learn, you know, what you've done is a lot of work. It takes a lot of time to learn. So let me just take your alerts, not day trade alerts. These are swing trades. I'm going to explain to you deep in the money options. It's basically stock replacement. There's a lot of benefits to it. And kind of give you guys a different insight. So instead of teaching you, I'm going to show you guys how to just let me do the research, me and my analyst, and just follow us. It's probably the easier route. That way you don't have to spend all these hours attempting to learn, because it is hard. It is possible to learn, but let's just, again, be blunt. It takes a long time. Has anybody heard of deep in the money options before, or leap options before? Is this new to everybody? So if you've never heard of them, I'm going to give you guys a 101. Okay, so I'm going to give you an explanation of who I am, why you should consider listening to me. Number two, why deep in the money options are ideal, how the research becomes an alert for you. I'm going to walk through recent examples, literally the past 3 weeks. We're in Victoria's Secret long. If you saw that stock, it's up 40% plus in about 4 weeks. We were in that with deep in the money options. I was in Dollar General, a few other names as well. And I'll give you literally real examples. This is all $100,000 portfolio. It's real money, no like fake pretend nonsense. It's real dollars. And I'll show you guys as we get through this. And if you stay till the end, I'll give you guys a trial offer as well. Okay, so if you guys have questions as I go through this, just pop them in. Happy to take them, and let's get into it. So that's me there. I live part-time in San Juan. That's where I'm at right now. I'm on the East Coast +1, so the market doesn't open until 10:30 here. I live part-time in Phoenix, Arizona, so I split my time. If you guys know anything about the tax rules in San Juan and the state, that's why I'm here. I moved here 3 years ago because as a trader, it's beneficial to not pay capital gains tax. So that's me there. I'll give you a quick background. On the top right there, that's me at the age of 30 as a portfolio manager working like 70 hours a week on Wall Street. I ran a $7 million long short equity portfolio for a hedge fund out of Arizona. To the left there, that's me at the start of my career at the age of 20. I worked at Charles Schwab when I was an undergrad, put myself through school, worked 40 hours a week there, worked at Charles Schwab for about 1.5 years, 2 years. A lot of people in this business, a lot of backgrounds are made up and just kind of fake. People like to make up stories. This is real. This is my Form U5. This is what you get when you leave a firm from the SEC. There's my name there. This is a Form U5. This is when I left the firm in May of 2007. Okay, so this is my CRD number to show you guys I actually really did do this. Literally my entire life. This is what I've done. Okay, so I spent some time there as a prop trader in the future space for a few years. I went to work for a family office in Los Angeles. We shorted University of Phoenix. Back then, pretty large trade, over $10 million short position. In 2013, shorting University of Phoenix, Corinthian colleges, through deep fundamental analysis of the balance sheet of that company. And then I moved to portfolio manager. Okay, so back in 2013, I got into this space, started teaching traders to trade the markets. Well, I've taught a lot of really good traders. If you follow my YouTube, I'll give you some links later. I have people that literally this year put up $500,000 trading equity options and shares. I mean, it's real, you can see it. But again, some people, again, you just don't want to spend the time learning. It's easier to use the research, and different strokes for different folks. So this is why the deep in the money alerts. Okay, so that's a quick background about me. This isn't about me, this is about you guys. So let me do my best to kind of talk to you guys about this. And let's focus on that. Okay, so what is the goal of all this? Okay, and I can't take credit for this. This was a long-time subscriber to this report that I put out. Every week I put out a 15-page report, which I'll show you in a second. I'll give you guys a free trial. You can read it. That covers equity, long, short, value stocks, special situations. We bought Spirit Airlines about a month ago. I had a long-time subscriber. He was in Phoenix, and we were having drinks, and he goes, "Look, man, this is amazing." He goes, "But I travel so much." He runs 2 companies, sort of family, and he goes, "Can you just text me and tell me like what to do?" And I go, "You know what I'm going to do? I'm going to take the report and I'm going to create alerts." Okay, but you all know this. Have you guys ever been a part of like an alert service before? Anybody here? Or like like the live trading rooms people have, like futures rooms, or the day when you try to take the trades, what typically happens is they're like, "Hey, I'm going to do this," and you're like, "Okay," you get in too late. It doesn't work. Okay, let's just be real blunt about it. And I'm well aware of that, okay? So as somebody who's an entrepreneur, I try to figure out solutions. So I go, what's the best way to provide people a long idea in a stock or a short idea without you getting the alert, rushing to your phone, and not missing it in 5 minutes, okay? So the best way to do that are deep in the money options, okay? And what we do is we use long-term expirations, anywhere from 3 to 9 months on these options. The goal is quick profits, okay? Most of these trades last anywhere from 1 week at a maximum of 12 weeks in time, okay? We're not gonna wait around for 6 months, 9 months. If you have a portfolio of $100,000, we're looking for returns every month, 2, 3%, is what we're after. Last month, I think I was up 2% on the portfolio. Again, 2K is 2K, and the amount of risk is so nominal that it adds up, okay? These are all fixed risk trades. So when we put on these positions, just like an option, if this costs us $5 for the position, that's the max. If we buy 3 contracts, the most we're gonna lose is $1,500, okay? So if you've tried equity options trading, if you tried futures trading, you've all seen it. It moves really, really fast, okay? And you can try as many strategies as you want. You can backtest as much as you want. You can do as many indicators as you want. It's real simple. Your personality can either handle the volatility or it can't, okay? I've done this my entire career. I was a prop trader, trading 50 lot, 100 lot positions on S&P, on West Texas, on the DAX. It takes a certain personality, okay? It doesn't mean that investing and trading is not for you. What I'm trying to do is show you a different perspective, okay? These are less stress, okay? We put these positions on. I'm gonna show you the portfolio in a second. There's a position in a stock we have right now. And again, this isn't financial advice. It's called KVUE, okay? We've had this position on since I think the start of October, okay? I don't even look at this. I own $1,000 of options that expire next summer, and it's up 50%. I don't have to wake up in the morning and babysit it. I don't have to sit there and look at news. I don't have to sit there and look at indicators. I could live my life, put these positions on, and it's very, very simple, okay? And that is the goal of this. Again, this isn't for everybody. This was really made for people that, again, have a portfolio where they want to be passive in it, people that don't have the time to do this, people that just are like, look, I just want to make money, you know, enough of classes and webinars, just let's get to the point of making money. This is what this is for, okay? So that was the intention of this. So far, it's worked extremely well. Again, I'm going to go over the portfolio with you guys so you guys can see it and go through it. So here's the philosophy, pretty straightforward. It's no buy and hold, okay? I'll tell you a quick story. I was in San Juan yesterday. I met up with another hedge fund manager. And the hedge fund space is very interesting. He was in a stock, an oil company. It's in litigation right now, very small company, okay? And it's tied in this position, about 20% of their portfolio for the past 3 years, okay? Just to get a return. There's a lot of ways to pull money out of the markets, okay? This model, like I said, is 1 to 12 weeks. Okay, so we're not gonna wait a year to pull money out. It's either gonna work in 1 week to 12 weeks on average, and that's it, okay? So it's low volatility. What I mean is you're not gonna, you know, if anybody traded options here before, you know, people talk about, you know, diagonals and all this complex options trading stuff. And again, in my personal opinion, I've never done it because it's just too complex. This gives you low volatility returns. And the reason it's low volatility is because when you use an option that's in the money and has time on it, if the stock moves 5% plus or minus on you, it's not going to have the option down 50%. Okay, this is really, really important to understand. If you struggle with trading and your emotions and seeing things go red, you need to look at a different product. Okay, I've told people this my entire career. There's only so much you can do to lead people to drink the water. It's entirely up to them, okay? So what is the strategy that we use to find the stocks to go long or short on, okay? So I'm gonna give you the 101 on this. Unlike a lot of people in the marketplace that talk about trading from a technical perspective only, or indicators, I don't. I came from a background that actually cares about what a company does. Of course, I use technical analysis, it's not a secret. But if you don't understand why something's happening, when you put a position on, typically the confidence goes down, okay? We use something called absolute return in the hedge fund world. This is something that's key, but we've broken it down to the retail trading perspective, okay? I don't care if it's a bull market or a bear market. I don't care if it's sideways. I don't care what Jerome Powell's doing. I don't care what the VIX is doing. I don't care what gold is doing. I look at everything, whether it's Apple, whether it's Dollar General, whether it's oil, and I look at it and say, how can I make money from this particular situation? Okay. Everybody on Twitter and their newsletters can make S&P market calls 6 months out, 12 months out. Everybody can argue about whether the banks are going to go bust or not. I don't care. My goal is to make myself money and my clients money, nothing else, nothing more. So we'll implement a lot of strategies. Okay, so typically most people are just indexing to the S&P and buying and holding. Okay, this strategy goes long or short. We're just looking for returns. Okay, we use fundamental analysis plus technicals, and here's the reason why. When you have a sound fundamental thesis, the technicals always take care of themselves. Okay, I mean this. I'm going to share a story with you in a second in 2022 about shorting Carvana. I didn't short Carvana, and we cleared a lot of money on this, well into the 7 figures, because technical analysis or MACD or relative strength told me to. We shorted Carvana because there was fundamental issues wrong with that balance sheet. However, if it wasn't because of the technicals, we wouldn't have entered the trade. So what we do is we go and look at situations and we try to understand why it's happening in the first place, and then we apply technicals. Okay, so that's how we develop these investment ideas that go into this portfolio to give you these alerts that you can use. Any questions on that? Looks like there was one. Let me make sure. What is your percentage target would be? Does that determine what you're trading? What percentages you target? What do you mean? Like on a trade, like what are we looking for return wise? Is that what you mean? Yeah, if you can elaborate, I'll answer. I don't understand exactly the question, but I'll try to answer it if you can elaborate. If you're asking like what trade return we're getting, I don't trade like that. I don't look at the market from the perspective of risk to reward. I know a lot of people in this business, especially, like to teach you guys risk to reward concepts where if you were going to risk one, you have to, and I don't. I buy companies. I don't buy risk to reward scenarios, and I'm going to show you examples of this. Okay, when you buy good companies and good situations, the returns take care of themselves. But if you don't know what to look for from this perspective, you will get stuck in the perspective of measuring everything in the realm of what's the win percentage or what's the risk to reward. Okay. So let me give you an example how this could fit into your portfolio. Okay, so let's say you run a $100,000 investment portfolio. I'm just giving you arbitrary number. Okay. Everybody has their own views on how this works, which is what makes markets unique, and you shouldn't avoid that. But again, you can take little pieces from me, other people as you go through this. So part of it could sit in cash, part of it could be active long short, part of it could be buy and hold stocks you like. Okay. What we do in this portfolio is your active cash flow for the portfolio. Okay. So you might want to own Apple for 5 years. You might want to own oil stocks right now because they're paying out high dividends. And you don't want to mess them. You just want to own them to get the dividend. This part of your portfolio brings you cash flow. Okay. You know, people like to talk about in this business selling calls against your positions to you're getting rent on your money. Okay. This is a better approach for a lot of reasons. This is like active cash flow. Okay. There's no margin. When you sell calls, right, even with your position, you're going to get put on margin. When you have to sell diagonals, you're going to get margin on your account. Not that margin's a bad thing. Okay. I'm just showing you the benefits to this. Number 4, these are fixed costs. Okay, so I want you to think for a second right now, if I told you tomorrow we wanted to buy Target stock, I think it's trading, what, 130 right now? And we wanted to buy 50 shares of that, okay? And you had a $100,000 portfolio. That takes up a lot of the position, cash in your portfolio. But what if we just went instead and bought a deep in the money call that cost us $3,000 instead, okay? that expired in 5, 6, 7, 8, 9 months. And we just did this instead without tying up $8,000 or $9,000 of capital, where you're worried every day watching it, trying to day trade it up and down. You just, I'm going to buy this. I think Target is going to trade higher, and I don't have to babysit it every day. This is the approach that we take. So whether this fluctuates $2,800 or $2,950 or $27, we're not going to sit there and panic because we have time on the options to be right. And when you understand why you're buying something, the fundamental plus the technicals, you'll have more confidence in what you're doing. Okay, everybody can sit here and talk about indicators and they've back tested it for 20 years. Trust me, I've seen everything in this business in my career, everything. Okay, but the reality is this. A lot of you have bought stocks before because you know the company or know the situation. How much more confident are you when you understand why it's happening? You're way more confident. Okay, so this gives you less capital to be allocated and you can leverage the position. Okay, so think of this as stock replacement. And we're going to get to some returns. And again, if you have questions, ask. I'm happy to go through them to clarify them. If I don't make sense, you guys, yeah, let me know. So how do the research to alerts happen? So how do you actually get these alerts? Let me show you what happens on my end to give it to you guys to do your work. Okay. So typically every week I do research. Okay. I'm going to give you an example of this as we go through it. Every week I write this report. We update it. You get access to it. You can read it in 5 minutes. You can spend 3 hours analyzing it. It's entirely up to you. So this is how we generate ideas. Typically, I'm looking at things across the world. Obviously, what the Fed's going to do, what central banks are going to do, corporate policy changes. I'm going to give you an example in Victoria's Secret. Victoria's Secret literally had a policy change about a month ago that got me looking at the stock. Not technical analysis, not MACD, not the VWAP. Literally a simple idea. Okay, at the end of the day, a lot of the companies we buy and short have fundamental drivers. Fundamental tailwinds, which I'll explain. Once we understand this, then we add on the technicals. Okay. In February 2022, there's a link on the website. I'll give you guys access to it. We shorted Carvana. I wrote a research report. Forbes covered it. Bloomberg too. We shorted that stock, put this research out because they were fraudulent in many ways, in my opinion. And we released it. We didn't look at the technicals in the chart and say Carvana is a bad stock. We understood things that were going on. They were out of money, potentially, in a few quarters. There's some other accounting issues as well. Once that was understood, we did this. Okay. Now, here's the best part about all of this. You don't have to do this. Okay. Let somebody like me, who spent in my entire career, 15 plus years on Wall Street doing this, let me do the research for you. Okay. Let me do it. I'm going to give it to you and I'm going to say, look, based on this, this is what we think is going to happen. You can be like, you know what, Dan, you're actually wrong on this, and tell me I'm wrong. I have thick skin, and don't take the trade. Okay. But instead of making this harder on yourself by researching constantly, looking for indicators, looking for systems, let me do what I do best, give it to you, and then you decide whether it's worth it or not. You be the judge. So once that's done, I then give you the trade execution. I say, look, we're either going to go long or short this. We're going to use a deep in the money option. I'm going to give you the strike, the expiration, and the size. Okay, I'm going to tell you, this is exactly what we're going to do in the portfolio. On any given trade, we put a max of 4% risk on. Okay, so we do all of it. And you can decide whether or not it's worth it at all. You can also take the research that we give you on Sundays, and you can go look at it for yourself. And maybe I missed something that you caught. So this is what it looks like. We do the research. Once the research is in, I give you access to this report. I'll show you in a second. Some of these ideas take 3 or 4 weeks to happen. Okay, I'll tell you, like guys, like right now. So I'll give you an example. Okay. So I'm waiting on Charles Schwab to do something. I've been waiting for this. I missed the entry, but I'm waiting for another entry. Okay. And I'll tell you guys in the report, I'm saying, hey, we're waiting for this to happen. So when Monday comes or Tuesday or Wednesday, when you get the email alert, you're not like, oh, wow, what's this guy talking about? I'm going to tell you guys in advance why I'm even looking at this. So once you get the email with the alert, you're not taken back, right? Does that sound good? Right? Because most of the stuff I think that you guys have seen in this business, and I asked a lot of people when I did this, is you get surprised. Somebody sends you an alert. You got to put it on in 5 minutes. You don't know anything about it, and you got to take their word for it. Okay. I do all this stuff ahead of time. Once it's done, we manage a position, typically 1 to 4 days before we exit. I send you an email and I say, hey, look, we're getting really close to this. I'm just giving you a heads up so you're not shocked. You might want to consider getting out of this position. Okay. So let me give you insights to this here. Talk about using the AST alerts. Okay. So these are trades. These aren't investments. When we get into these positions, we're just cash flowing. Okay. So if for example, on Victoria's Secret, which I'm going to get to in a second, I think that stock's going to trade a lot higher. Okay. But we're already up like 3 times on the options, 2 times on the other options we have. And on the stock, we're up like 40%. Okay. I'm not going to hold it forever. The point is cash flow. Okay. There's a difference in this. And I need to be clear as I go through this webinar with you guys and explain things, because I think a lot of people in this business that don't find the returns they're after or have expectations that are missed don't define what they're after. Okay. We can sit here and hold Victoria's Secret. And again, not a financial advice. I think it goes back to the IPO price at 70 plus in 2 or 3 years. But I'm not trying to make money in 2 or 3 years. That's not the goal of this. Okay. If you don't get an idea the first week, that's fine. Some months there are 2, but I'm very, very patient about the ideas I put out. Okay. So you're not going to get something from me that we're like, I'm going to send you 5 alerts a week. Okay. I'm sending you high quality trades that work. So far, the past 2 quarters, I've missed on 2. One was on Alibaba because on their earnings call, they took away their spinoff, and the other was on Tesla. I've hit on every other trade since this has happened. Massively on Victoria's Secret, okay? Massively on gold. It's very rare for me to get something extremely wrong. So we use deep in the money options, either calls or puts. So again, unlike other people in the business, I don't care if something's going higher or lower. I am a trader. Okay, I'm short a company right now. I'm not going to give it to you. If you sign up for this, you'll see it in the report. We're long put options on this. Okay, so it's a fixed cost trade, fixed stop, and predetermined targets. So I'm going to tell you what the cost of the options are going to be. I'm going to give you the stop, and I'm going to say, look, between these targets, if it gets there, this is where we're exiting. Okay, so this is all designed for you to take this and not have to sit there and spend hours and hours and hours researching. Okay, I already do this for my fund. It's what I do on a daily basis. It's the easiest way to do it. So there's a question, when to get out. What do you mean when to get out? When you get the alert. When you get the alert is what we're going to get out. So I'm going to give you, when you get the alert, you're going to have a whole message. It's going to say, we're going to buy this here. We're looking to get out of this there. And you sit back and you want to wait for it to happen. Okay, the point is this, with these type of trades, you don't have to babysit them every day. This isn't like day trading where every day you have to watch this, okay? And this is really important to understand as you guys are going through this. Deep in the money options, when you have a lot of time on them, the options, when the stock moves, aren't going to fluctuate 50%. Okay. And it's real simple. I've always said this, just like I told this other hedge fund gentleman I was speaking with last night. Okay. I love my money, right? Think of your money as soldiers. When you invest your soldiers, don't send them into a battle where it's going to be a tough battle or a battle where they're going to lose. Okay. At the end of the day, you need to understand if you're doing this to be right or you're doing this to make money. Okay. I don't like making things harder for my money. I want to make it as simple as possible. A directional investment is the equivalent to buying the actual stock, but instead of using the shares, you're using deep in the money options. So this is what the alerts look like when you get them. You get the report. Looks like a question real quickly. How do you identify when the market, for example, tailwinds are favorable or not? Do you factor those in? The market QQQ, for example. No, because we don't trade stock. So this is a really good question. And I want to address this because I get this a lot. So you're asking me, do I look at the NASDAQ and S&P to determine whether the rest of the market is a long or a short? That's what you're asking me in short, right? I mean, that's what you're asking. So this is a really important question. I'm going to address this here because I've had, like I said, a lot. Not every asset in the marketplace has to do with the S&P and QQQ. And I'm sure you know that, but I have to say it for people that don't know. Some companies are going to trade better without the QQQ going higher or lower. It doesn't make a difference. Okay. So to be clear with you guys, we're not doing the generic, hey, I'm going to buy Apple calls, I'm going to buy Amazon calls. Everybody, it's generic. Everybody does that nonsense. Okay. Everybody can sit there and look at a chart of Amazon. I'm looking at situations, for example, we bought gold literally last week before it broke out. Okay. I'm not looking at the QQQ or SPY to make investment decisions. And and again, you're not wrong on that, but I see that happen a lot with people where they get tied into the direction of the S&P and NASDAQ. The markets are much bigger than just the NASDAQ and S&P. And if you take a different perspective and look at the market through a different lens, I think that'll benefit. For example, while it wasn't in the alerts, it was in the report, we bought Spirit Airlines. Spirit Airlines has nothing to do at all with what the S&P or NASDAQ is going to do, literally at all. So, and let me go over the alerts. You guys keep asking questions. I love it when you guys ask them. I'm happy to answer them and go through them. Let me go through the alerts process real quickly, and I'll answer this next question. So this is how an alert works. Okay, so I think I've got it down pretty pat. You guys can be the judge. I'm going to give you guys a free trial of this. You can be judge and jury and see if this works for you. So typically, the week of the report, there are notes saying this will be in play. So on Sunday, you get the report. There's a whole section I'll show you in a second, I promise. And I'm going to be like, hey, look, this is probably going to happen this week. I'm just giving you a heads up. You're going to get an email from Substack. Anybody not familiar with Substack? It's just simply a blog. It's going to send you an email. You're going to get the email directly to you, and it's going to have the notes. Okay, it's not a long email. It's like, the whole idea is I want you guys to read it in 2 minutes and be like, okay, Dan already told me on Sunday we're doing this. Here's the strike, stop, exit. I put the trade on. Okay, again, when I did this, I asked people that have been my clients for years, specifically one of them. Okay, he travels a lot. Okay, and he's in our community, and he actually did a video testimonial. He doesn't have time. He doesn't want to sit there and read a research report about the company. He's like, look, I trust you. Tell me what to do. I'll do it. I'll do what I do. You do what you do. And that's the relationship I want all of us to have if you guys work with me. So the exit, same thing. Okay, literally like 1 to 4 days ahead of time, I'll tell you guys. Okay, I'll be like, hey, look, we're getting real close to this, guys. You want to be out of the position. Okay, so that I promise you guys, the worst thing, I would hate this if it was me. If I woke up tomorrow morning on Friday and I'm like, hey, you guys better close this option trade in the next 5 minutes or we're going to lose money. I would be upset at myself. Okay, I wouldn't do that to any of you as my clients. So this is how the alerts process works. It's designed to be as smooth as possible so that you can all make money doing this. So how you get the alert? You get it through an email, through Substack, which I'll show you in a second. I'm going to give you some examples of alerts right now. So Dollar General, I think they just reported, in fact, yesterday, right? I think they reported. So this is what it looks like. Okay, and you guys will be able to see this if you guys take the trial. I'm going to give you guys a free trial to it for 30 days. But let me show you what it looks like. Okay, you're going to get this email. It says new alert, Dollar General. It was in the report last weekend. As of close it today, it's ready. Here's some quick notes. I don't like bottom hunting for stocks and lying to myself about why they can trade higher, but this is a named company that's been punished enough this year, missing on some numbers. I expect this to begin being bought into the end of October and into November, and this should take 4 to 7 weeks in time. Okay. Now I can't sit here and tell you guys why I thought it was going to take the time again. And it's not that I'm hiding things from you guys. I'm like, oh, what's your model? The whole point is this: let me do the research. It's what I do. Okay. You guys just focus on making the money. So You get the alert. Here's the trade structure. Bought January 2024 option calls. Buy in between this price point. Okay. So I give you a range. Okay. The reason I give you guys a range is if you don't get the alert, you miss it that day, you can still put it on tomorrow. Okay. And these trades, if you're probably looking, you're like, man, this is a $3 range. That's crazy. Okay. We're not taking trades looking for $50. Okay. We're in a high inflationary environment. I don't know about you guys, but $50 doesn't go that far for me anymore. Okay. So I'm looking, we're going out, let's make some money here, right? Let's get like steak dinner money. Let's not look for Burger King lunch money. So 2 contracts total. Stop is at 7 on both. You're going to target this. Okay. Now, let me explain this before you guys ask this, because I've had this asked me before. A lot of people are obsessed with risk to reward ratios in trading. Okay. It's always a tough question. Okay. I don't look at the market from risk to reward ratio. Okay. And I have to explain it from this perspective. Certain option expirations and certain options don't move with the volatility like a Netflix option that expires in 7 days. Okay. So even if this thing didn't work, it didn't even get close to this. The reason some of these trades the stop is wide is because I don't want to sit there and have you guys watching them every day and be like, oh, am I getting stopped out? Am I getting stopped out? The point is stock replacement. Okay, so instead of buying 100, or this trade, 200 shares, I think it was trading 85, I think it was back then, costing you $16,000. You could buy this for anywhere from $2,000 to $3,000. Okay, mentally, I'm telling you, if you haven't done this, it's much easier. Okay, it's legitimately, it's much easier. So this is one of the trades we took. Again, you'll get full access to this as you guys go through it, and you'll be able to see all of it. Like I said, I'll give you guys a trial to this, and yeah, we'll go through it. So this is what happens when you get a closing trade alert. You'll get an email, gives you quick notes. They had a CEO change in the company. This was our target. The options traded a lot higher. They could trade 23 to 25. I give you an alternative exit, but hey, you want to try to exit this position here. Okay, exit no later by market close on Wednesday. This is 2 or 3 days ahead of time. I tell you guys again, you all have careers and lives. I mean, to be honest with you guys, I did this my entire life. I was at the computer for nonstop. I try not to do it every day. I trade in the morning every once in a while, but I do a lot of research. I'm not actually like a day trader. I'm not a day trader at all, to be clear with you guys. So the point is to give you guys time to get out of the position. Okay, so let me get into Victoria's Secret. Everybody saw this stock recently. Did you guys see what happened to this thing? Victoria's Secret is bringing sexy back for the holidays. I think it's been long overdue. Personal views on this. And we bought this stock. It's up tremendously. I'm excited about it because I'm making a lot of money. Clients are making a lot of money. And who doesn't like making money? Let's get into this here. Okay. So I put this in the report about 2 months ago. The CEO in the company had a few things to say. There's things to say about corporate policy. Remember I showed you guys a few slides ago about how I develop investment ideas? Okay. They had a few things to say about policy. Corporate changes. Okay. They were changing their policy on their company image. Okay. As soon as I saw that, I know the balance sheet well. They've been losing money. They adjusted their earnings loss. They basically said, look, instead of us losing this amount of money, which is like 70 million, we expect to only lose 60 million. And in the wild world of Wall Street, which is crazy, right? Because in your real life, you had a business, okay? You went and told your investors, guys, and we were supposed to lose 100,000 this quarter. We're only going to lose 90. Your investors would fire you. Okay, but this is Wall Street. It's crazy. So they came out and said, look, our loss is going to narrow. And I saw that. Okay. And so we ended up buying the position. This is the position we took. We took 2 strike structures. We took January 20 calls from this entry here, 3 contracts. They literally hit this target last week. And we took this one as well. June 2024 options. targeting 20 plus. We're still in this trade right here. Anybody have an idea why we would have taken two different strikes on that? So your question is, so your choice and option is to protect the trade from noise and stock price and leverage, but not to utilize volatility. Correct. Yes, that's correct. We want to avoid the day-to-day noise of the market on an equity. We want to diminish the volatility by using longer duration. Now, and again, I'm not trying to, again, I have no issue sharing. You know, a lot of people like talk about their proprietary models. I'm happy to tell you guys a lot of it. I mean, I want everybody to make money legitimately. Every trade, depending on the IV rank on the stock, the personality of the stock, dictates the duration on the options. Okay, so there's not a set model where I'm like, okay, every trade is 90-day options with deep in the money. Okay, I assess things on a trade by trade situation. Now that's complex, right? But again, you have to understand this. I've done this 15 years of my life, the highest levels. Okay, so that's why I'm telling you is let me do this work for you guys. And you can tell me I'm wrong. I'm happy to take the heat and you guys can take it. Okay. On this situation, because we believed in this stock, we bought two different sets of strikes. We've already cashed in on these ones. Big time. Okay. Huge trade. Look at Victoria's Secret stock chart. And we're still holding these ones. I bet these go to 30 a contract. So why would I have done this? I did this because based on this situation on the company, when I researched about it, I figured that they're probably going to go back to 50 to 60 by next summer. Okay. And let's just say devil's advocate. Let's say if you're wrong on this. Okay. I'm happy to be wrong. I've been wrong plenty of times in markets. But with this here, if I'm wrong, I'm not going to lose a lot of money. Because I already cashed in on this one. I still have this position here. Okay, so on some situations, depending on the analysis that I do, I'll tell you guys, I'm like, hey, look, this is probably warranted to use a double strike position. And literally right now, Victoria's Secret, this is a massive win. Yeah, longer dated are more forgiving for sure. And that's the whole point with a lot of this stuff is, you know, even though I think, look, everybody you guys listen to, we all think it, let's just be blunt about it, thinks they're good at doing this, right? I know what I don't know sometimes. And even though I think that I'm good at the entries of market timing, I'll miss sometimes. Okay. And the point is, I don't want to be a superhero doing this. I want steady returns. Okay. So I'm not looking for 10% of, and I'll show you, I'm going to show you some P&L in a second. I'm up massively, almost 100% this year on a different portfolio that is volatile. Okay. I'll give you guys an option to get to that too. But if that's not your flavor, this might be. And for a lot of people, this is their flavor. So this is a closing trade last week issued. Closed leg one, not leg two. It had earnings. I'm going to sell three, keep one. You're already up in this position. Not selling the June calls. It was a plan in case it moved harder than expected, which it has. That's it. Okay, like I said, so far the past 2 quarters, I've missed 2 trades. Number one's from Alibaba, and we were up on it. We held it through earnings. We had June options for next year. They canceled their spinoff. I think we lost 30% of the position. This was literally 2 weeks ago. Okay, literally, this has just happened, by the way. You guys saw gold breakout Sunday night, monster trade, pulled back a little bit, kind of bad, but whatever. We'll be okay on this. So opening trade gold, quick notes, NEM was in the report. This has been tracked, the direct play technical signals all over this to get long. Going after the May high, this will take a little time due to the slow nature of it, but when it breaks the May highs, I think it accelerates very quickly. This was issued 2 weeks ago. The trade were March 2024 GLD calls. Okay, this is the option. Don't pay more than 8, 2 contracts max, stop at 5. This is what we're targeting. Okay, so in this situation, this was December, January, February, March. These were only 4-month options. Again, every situation based on how I analyze it dictates the expiration. And again, you don't have to know why. That's not the point. The point is once you trial this and see the earnings, just trust me if you want to. All right, you're the judge and jury here, not me. And let me do what I do best. Is there a minimum portfolio that makes this really work? Yeah, so you need about 10,000 at a minimum to make it work. Or, I mean, look, I have somebody in my group right now. He's actually a good friend of mine who I kind of mentored. I mean, he's younger than me. We mentored him in college. My buddy did anyway. And he has a smaller portfolio, I think like 7 or 8. He's made it work. The difference would be instead of taking like on this position here, 2 contracts, just use 1, right? So let's say you had a $10,000 portfolio, right? Cap your risk at like 10%. I know that sounds crazy, guys, but you know, we can't all be Warren Buffett and risk 1% of whatever amount of money that guy has. At a 10% risk, you're not going to lose the entire premium, okay? Unless we get a position, the company goes bankrupt the next day, the option doesn't go to 0. We might lose 50%, but even then, you know, we still have a fighting chance. So this is what the report looks like. Again, you'll get one second. You'll get access to this, okay? Now this full report is 14 pages. Let me just brief you on this right now. Again, when I wrote this report, not that it matters for you guys, I wrote this for me, okay? When I was a portfolio manager in 2015, you get people, just like I'm trying to sell you guys something right now. In Wall Street, you get like all these investment bank analysts and research analysts, they call you up because you're a portfolio manager and say, look, you should buy this company that we track. And they send you free research. And most of the time, like, yeah, you're full of it. But sometimes they'd have good information. So I would start putting in an Excel spreadsheet to track it. And I created this report. So I make this for myself and it's pretty big, okay? And it works. If you want to dig into it, you can take the whole thing and see how you want to use it. But this is what I've taken out of it to create this product, okay? And this is the brainchild of my clients, not me. They told me, like I told you guys, they go, look, this report is amazing. I don't have time to go through it. Just tell me what to do. I'll happily pay you to do that. I said, okay, let's do this. So every week you get access to this. It'll say, like, for example, we were tracking this company. I'll give you quick commentary on it. Again, I'm not going to give you guys a 10-page research report. You don't need all that, okay? I'll just give you the quick skinny on it. Okay, Victoria's Secret, 1022. I wrote a blog piece about it, so you have access to this private blog. On the blog, if I'm really confident about something, I'll give you a longer research report, okay? But again, the idea is not to bore you guys with 10 pages. I hated that as a portfolio manager. I wanted somebody to say, look, give me the short and skinny on this. I'll make my decision whether or not it's going to work. Okay, don't pitch me on it. Just tell me the facts. I'll make my decision. So you'll get all this action here and we'll track it. And as it gets close, we'll talk about it. So this is the one that didn't work. This had the earnings. Yeah, it just took us. That's one that didn't work. Okay. This updates on a weekly basis. And you can go through this and read it. And yeah, you can see it. No IPOs. No, I don't. No IPOs. I don't. Not that I'm against trading IPOs, but it's, unless you're trading the equity, it's hard. There's a section in the special situations investing, like Spirit Airlines with special situations. So I'll cover that in the report. But yeah, I don't do IPOs. And there's not really a sector. So there's a sector in there that's momentum stocks, so you know, the popular stocks everybody likes. There's a section for swing trades, there's a section for commodity, S&P, oil, gold. Again, I am, like I said on a few slides below, I take absolute return approach to markets, okay? It doesn't make a difference to me. I am asset class agnostic. If I look at something and I can figure out how to make money from it, I'm trading that position. Okay, so whether it's consumer discretionary, whether it's metals, it's all the same to me. I'm looking for asymmetry in my money. I don't want it to get abused. Okay, let me get this here 1 second. Got the Hopefully I get done on time right here. Okay. These are real people, real results. Again, you guys can be the judge and jury. I can sit here and talk all I want on this. You guys, I want you guys to be the judge and jury on this through the trial, and you can decide if this is for you. This is literally a few days ago. This is Uncle Mike. He's in the room. He's a longtime client. Swing trading all your stuff. I'm just checking. I'm just taking your recommended size on it. Some people will take the size and adjust it. Again, I wouldn't. Let me do what I do. There's a reason behind it. So here's some of his position. He had Savers, Victoria's Secret, PayPal, some position we had in KVUE. Remember I told you about KVUE? We've had this for a month and a half, okay? These options are up. They're actually up more than this right now, okay? This works if you just let it work, okay? It's not very sexy, but again, just ask yourself, at the end of the day, like, do you wanna make money, okay, to do things, or do you wanna be right? I like making money, okay? If you asked me 15 years ago, my career, when I was very young doing this at 20 years old, I thought I was going to be some hotshot trader all day long. And it's just, that's ego and arrogance and being young. As I get older, I just want to be consistent and make money. Okay. This is one of my good buddies who I mentored, really good guy. This is literally last week. Okay. So this is his P&L from the alerts. Okay. This is somebody who doesn't know much about trading. I've taught him over the years. I did a mastermind class that lasted a month long, 4 nights a week, 1 live trading session a week. We finished it last month. I put him in that, and he's going to do well. But again, the point is, it's going to take him a while to learn. Okay, I'm doing this my entire life. So instead of being dependent on your own research, let me teach you and give you my research, and then make some money along the way. That's my pitch to you guys. Again, you guys would be the judge and jury. I've been with you a long time. I always believe in your teachings and reasonings. I've been with a lot of other services, and you definitely stand out. This guy's been around for 6, 7 years. Again, it's very rare people come in and work with me and don't come back. It's just, again, I might not be be real blunt with you guys. It might not be the cheapest out here. I don't charge you guys $7, but I'll tell you this: you're definitely going to make money, and you're going to get your money worth out of this. Okay, if you just let me do what I do. But we'll get through it. Okay, so it's free for 30 days. You can trial it. Again, it's normally $30 for 30 days, but I'm doing a promotion with you guys because you guys are here and you listen to me ramble. Okay, so if this is the link, you go to join.thelongvol.com/newsletter. You can also just go to thelongvol.com if you want, but this is the actual page to it. Okay. And I'll give it to you free for 30 days. The report, the 15-page report, and the alerts. Okay. When you are a member, this is what you get. You get the weekly report. Okay. Now you can take this report and use it for other investing things you want. All right. There's a whole section in there on futures. Okay. Oil. This week we were short oil. I promise you this. The whole report was like, you need to be short oil this week. Here's why. Here's a chart for it, etc. You get 2 to 5 alerts a month. Again, I'm not going to send out 50 a month. There's no need. These alerts work well enough that if you just do 2 to 5, you're going to make money. Okay, more is not better. It's a quick thesis. I'm not going to send you a 10-page story. You get access to $100,000 portfolio. You can track this. I update it every month. I don't update it every day because there's no need. Okay, I'm not going to sit there and do the counting on it. Every month, end of the month, you can see it and get access to it. Okay, that's what you get as a member. So we do the research, we structure the trade long or short, we give you the quick notes and the expected time, you then act on it or you can pass on it. It's literally that straightforward. So again, no more of this, hey, I have research. What do I do with the research? I do it all, okay? I'm gonna tell you, this is the research. Instead of buying the equity, let's all use this style instead and let's make money for once, okay? So here's the options for you guys. When you sign up for this, you can go and sign up now. You should sign up now, you have time. Make it free. You're going to get an email. You're going to log in. There's a 10-minute video explaining all this. There's a quick PDF on deep in the money options. There is support. You can email, ask questions. It's normally $30 for 30 days, but again, you guys are all here. So if you use this code Traders Exclusive, it's $0 for 30 days. Okay, so when you go there, just type in Traders, all lowercase, or it won't work. If that doesn't work, just email me or use the contact tab on the website. It'll make it free for 30 days. After that, it's $225 a month. Again, I know that might sound expensive, but trust me, if you're making money, it's not. Okay. So I think it's well worth it as you guys get through this. Did I
Can have
miss
the
any
link
question?
again?
Yeah. So it's join.thelongvol.com. Probably a little bit too long, but it is the link.
Not really. That's a subdomain. That's cool. It's a landing page, so they'll be able to get to that.
Yeah.
Join.thelongvol.com, right?
/newsletter.
Oh, all right. Here we go. JOIN dot. Whoops. /newsletter.
Yeah.
There we go. All right. That should help. You guys just have to copy and paste that into your browser. Oh, are you seeing the questions here?
Yeah. Let's see.
Yeah. Loved your presentation. Yay.
Awesome. Thanks. I'm glad you guys enjoyed it.
Now, did you answer
okay.
his other one? Do you focus on any particular sector or industry? Do you also include IPOs in your research?
Yeah, I answered that. Yeah, we don't do
Okay,
IPOs,
good.
but there's you guys. I mean, look, when you guys get access to this, and to be clear, when you guys go to the website too, it'll take you to this as well. This will give you a full primer on deep in the money options. So if you still don't, again, I only have 45, 50 minutes here. If you guys read this, it'll give you the 101 again on how to use them. So that you go through this and there's no like confusion. And there's also a video in there with a PDF to explain it as well. So all that's there for you guys. Yeah, so you guys have that.
Nice. Very nice. Very, very nice. You do have 6 minutes. So if you guys have any questions, now's the time to ask them, or I'm going to play another video. Oh,
Any questions? I'm happy to answer them for you guys. But yeah, take advantage of the trial. Like I said, it's real simple. It's at very minimum for free. You get to use my research for 30 days and see if it's worth anything. And then if you guys don't want, just send an email. You can cancel. It won't charge you the $225 a month. If you guys end up, you're like, hey, this is actually legitimate. He's not shooting, me wrong here. There's a month or yearly membership that'll give you $700 off. So you guys can check it out.
Fantastic. Thanks so much, Dan. I appreciate you being here very, very
Awesome.
much.
Thank you guys.
And
I appreciate it.
I wish you all the best, and I hope you have a great holiday season, but I also hope that everybody will go and take you up on the 30 days, because I'm pretty sure that most people do opt in for the long haul.
Sweet. I appreciate it. Thank you so much.